Thanks, Paul, and thanks to Reed Corporate for hosting this event. It's a great location and great to be back in Copper Heartland in South Australia. Just an introduction to FireFly Metals. We've pivoted obviously from gold towards the copper space, and that's obviously on the back of where we expect copper to go. And what we did about 6 months ago was we acquired the Green Bay Copper Gold Project, and it's located in Newfoundland in Canada. And what we have there is one of the highest grade copper resources around, and it's ready to go. We're already underground, we can already see the ore, we can touch it. It is a mine in waiting, and the timing could not be better from a copper market point of view. So we currently have a very large resource. We've got nearly 40 million tonnes at a grade of 2.1% copper equivalent. So for those that know about copper mining, that is very, very high grade. But one of the other key things about this asset is that it has substantial potential to grow. All right, there's a lot of growth left in this. We also have, in our back pocket, 2.8 million ounces at a grade of 7.2 grams per tonne gold in Ontario as well. So, with the gold price where it is at the moment, and the momentum that's starting to come back into the gold market, which is something that we haven't seen in quite a while in the junior space, we have really high hopes for that project. We're doing reviews on that at the moment, and we'll give the market some colour on that in coming months. And probably more importantly, we have a management team with a proven track record. A lot of the team is, fresh off the success of Bellevue, and also there's a few of us from Northern Star as well. So, we know how to build mines, we know how to make value. So just setting the scene, why copper? Why did we pivot into copper? This slide is just a really good visual representation of what's coming. And as Paul alluded to, the copper price is over $4 a pound. And for those of you that at a metric, it's about $9,100 a tonne, which is just huge. But to meet all these carbon emission targets that governments and politicians have set, we need more copper than what's been mined in the entire history of humanity by 2050. So think about that. And the problem with the copper landscape at the moment is it's getting harder and harder to find copper mines. We're not getting the production online in a timely enough fashion to meet all those targets that the politicians have set. So we believe there's another big copper boom coming, and South Australia is no stranger to copper booms. You've got Burra, you've got Moonta, you've got Kadina, you've got Wallaroo, you've got all those great towns that were built on a copper boom. You've got some of the best assets globally in copper in Olympic Dam and Prominent Hill. But there is a big copper boom coming, and it's just supply-demand related. So, grades are decreasing in copper mine. The capex required to get some of these big porphyries off the ground is in the mega billions of dollars to do that. The time to do that from discovery to production is usually over 20 years. Social licence is getting a lot harder to get. We've seen the problems in Panama recently that took out a couple of % of the world's copper supply. So we feel that the Green Bay project actually is a lot better than a lot of those things, and we're not getting those issues. I mean, we've got good grades, we can get into production very quickly. It's still relatively shallow. The mining will start from less than 200 metres below surface, and we definitely have the social licence to get this mine up and going. Very supportive community. The opportunity that we see is that you look at the ASX and the TSX for that matter, and there's very few copper projects of scale and grade in the junior end of the market. So for this copper boom that's just starting, where do you put your money? We're aiming to get this production of this project into that mid-scale level. And when you look at the names that own those mines, they're all your BHPs, your South 32s, your Newcrests, and or formerly Newcrests. And there's very few juniors of scale that would be producing in the order of 50,000 tonnes per annum. So, that's an investment opportunity. You look at some of the bigger players in there and they're multi-commodity. So you can't just buy the copper in BHP, you've got to take the iron ore, you've got to take all the other stuff as well. But in terms of pure copper plays, this really is one of the standouts in the junior end of the spectrum. It's been a huge 6 months for us at FireFly. Obviously we did the transaction, it completed in October. and it's been a very catalyst-rich story so far. We've started drilling. We've got a second rig in there drilling. We've started mining development already. We've acquired more ground. We've made some changes to the board. We've raised about $100 million. We've just completed a capital raise for $52 million. And also acquired access to a port that's only 6 kilometres away from the mine, as opposed to what they were doing previously, which was 140 kilometres away. And you can see the share price has responded. It was 37.5 cents when we did this deal. It did hit 79 cents at one point today. And what we see is a lot of room to grow in that share price. And the next 6 months is probably going to be just as catalyst rich as what we've done in the previous few months. So that's where we sit at the moment. That was a few days ago. Healthy market cap. I guess one of the really things that stands out is we've got a lot of institutional investment, which has been a great support for us. Very strong register for a company of our size. Just recently done a strategic investment into a company called Maritime, which hold a lot of ground and the port in the area that we're operating in Newfoundland. In terms of the board and management, I own a good share of this company, so we've all got skin in the game. But very tidy capital structure. But I think the highlight is the institutional investment. It's great to see it that high. And when we put out our new updated version, you'll probably see that global institution percentage increase significantly. Mentioned before, we've recently changed the board, and this has got a very Bellevue strong flavour to it. Kevin Tomlinson, who's also the chairman of Bellevue, is now the chairman of us, and just like to pay tribute to Ray Shorrocks, who's in the crowd today. He was our chairman previously and been working with Ray for over 3 years, and it's great to see the contribution that he's made towards both Orteco and FireFly moving forward. Steve Parsons, Mike Naylor, who everyone be aware of with their Bellevue success. And we've just added Jessie to the board as well, and she's based in Canada as long as with KT, so it's good to see some Canadian representation on the board. So just in terms of the highlights and what we saw in this asset when we bought it, we did a lot of due diligence on this. The first thing that we really saw was the upside. There is significant room to grow, and I'll show you through some slides as to why we believe that's inevitable that growth will happen, both in the mine and on the regional scale. The current resource is very healthy as well. It's already 40 million tonnes, but we have significant potential to rapidly increase that. The grade is a standout at 2.1%. The mine's ready to go. We can go underground. We can see faces of ore. I could make a phone call and get the copper out of the ground tomorrow if we wanted to. We can get down to 950 metres below surface. There's already a shaft there. We have a small mill, not fit for purpose. The mill is only 500,000 tonnes per annum and resource of 40 million tonnes. You don't have to be smart to do the maths to work out that that's 80 years to process that resource. So there's a mismatch between the size of the infrastructure and the processing capacity. We want to get this up in the order of 3 million tonnes per annum or thereabouts. We're doing those mining studies in the background at the moment, but there's nothing that we've come across so far that would stop us from doing that. And besides that, we've inherited a good team on the ground in Canada, very strong safety culture. And during the process of the acquisition, we were able to remove all the streams from the project. They were getting rid of most of the revenue from the gold. We've managed to extinguish that, and there was a lot of debt associated with it, and that's been extinguished. So we have this great resource, this great ore body with a blank slate. Now, Newfoundland, there's probably a lot of people that don't know too much about Newfoundland. It's a little island off the coast, the eastern coast of Canada. We don't even have to show this in North America because people already understand what a great mining jurisdiction it is. Top 4 globally in the Fraser Institute ranking, and that pretty much says it all. And one thing that's really struck me is the amount of government support that we've had, both federally and particularly from the province. They want to make this work. They want to see us succeed. They've got a very strong political critical minerals platform, and they are doing everything they can to help us, and we really appreciate their support. So what I said before was the potential for this thing to grow. And these next couple of slides are the investment thesis, okay? You'll be able to see exactly why we're excited about it. Now, this ore body has 2 distinct parts to it. The upper part is a very high-grade massive sulfide lens, a series of lenses. It's called a VMS system, and think DeGrussa, all right? And you can see some of the results that we've got. The grades and the widths and the thicknesses are very similar to what they got from DeGrussa in the early days, all right? So that's the high-grade stuff that's in the gold on that slide. Then beneath that, we've got what we call a stockwork zone or a stringer zone, and that's more amenable to bulk mining. So what you have is large, 100+ metre thick zones of copper that grades up to 2% plus. So even though it's more amenable to bulk mining, it's still very, very high grade. And you can see here the resource is in the red. It does start from 200 metres below surface, and at the moment it goes down to about 950 metres below surface. So about 1,200 metres of strike. Now, we've done some step outs. The previous operators have done some step outs, and we know that super high grade VMS system continues. There's a number of 4 or 5 massive sulfide channels, and you can see some of the grades that are in that, pretty impressive grades. You don't often see ore bodies where you can get up to 6+% copper equivalent, sensational grades there. And then, we've got that broad footwall zone, and even though it's slightly lower grade, compared to a lot of other copper grades, it is still high grade, and you can see some of the huge widths we've got there, 65 metres at 3.4% copper, for example. So, that will make a lot of money if you use the right mining methods, the bulk mining methods. And what gives us the confidence that it'll continue? In 2017, they drilled a hole with a parent with a wedge off it, and 460 metres away from that development is 102 metres at 1.7% copper in that bulk zone. And in that VMS zone, we got 6.3 metres at 5.9% copper equivalent. So we know the ore body goes for at least another 500 metres. Still open. What we're doing, since we've had it, is we're putting in this exploration drive there in the blue, and we're already halfway through the first leg of that, and we've got 2 drill rigs drilling those green holes, and they are hitting copper mineralisation. You'll see that we've put out some results in the last few weeks, and we are very confident that that ore body continues. And what that's leading up to is a significant resource update in the September quarter. And look, we'll be drilling those first 2 fans a hole by September, and I'll let you do the math. You can see there's 1,200 metres of strike on the existing resource. We're going to add at least 600 metres more to resource with this program that we're doing at the moment. So you can see that's where the growth potential is going to come from. And look, just pointing out a few things about why this is going to be a low capex startup. We've got infrastructure in place already, about $250 million worth of infrastructure. There's a shaft there, and it's reasonable size. It's 6 by 3 metres, and it goes down to 630 metres below surface. So that is a massive head start. Money we don't have to spend. As I said before, the resource starts like 200 odd metres below surface, so you're not mining at great depths. The footwall zone's already been accessed but barely mined, so very low cost for us to get into it. And the decline from the shaft downwards is already 5 by 5, so we can get reasonable sized trucks in there to support the sort of productivity rates that we would need to get to the size that we need. We've got a company called Entech doing the mining studies on that at the moment. The ground conditions are excellent, and you can see some of the photos there from site, and I've marked on the map where they are from. And what people need to remember that in Canada, the stress conditions in the ground are a lot lower than Western Australia. So 950 metres below the surface in where we are in Newfoundland is probably the equivalent to about 400 metres in Western Australia. So, even though it seems deep by Australian standards, it is not deep. And we're very confident that we'll be able to mine the bulk tonnages with minimal dilution. You can see from the photos how good the ground conditions are, very dry mine. And the other thing that's going to make this a low capex option for us is that the development that we're doing in-house at the moment is extremely cheap by Australian standards. We're paying about $6,000 a metre using our own underground workforce. And in Western Australia, it's well over $10,000 a metre typically at the moment. We've got access to hydropower as well, and we can get that for about 6 cents a kilowatt hour. In WA at the moment, they're paying over 20 cents a kilowatt hour. So, we have a great opportunity here because of that, hydropower to make this a very much a green mine right from the start by utilising the low carbon energy that's actually quite cheap. So the other thing that we've done on that chart of things that we've done in the last few months is we've actually expanded our regional footprint, and we'll put a bit more colour around this in coming weeks. But we picked up an extra nearly 200 square kilometres of ground around the mine. So we now own the majority of this VMS camp. And why we're so excited about that is there's 3 historic copper mines there that were mined in the 70s that have had no work done on them that look identical to what we've got at the main mine that we've started. It's the same rocks, same style of mineralisation, but very much untested. And they haven't done modern geophysics. We're getting that all started in the next few weeks. And, there's a very high probability of discovery on this ground. We've tied it all up and very excited about the potential to make another discovery. So not only do we have the in-mine growth, but we've got that strong regional discovery potential as well. Just in terms of the next 18 months, the timeline hasn't changed since the acquisition, and everything's going to plan, everything's going to budget. So now that we've got that capital raise done, we've got enough money to get through both phases of exploration, do another 2,000 metres of development all up, do the geophysics and do the drilling and rapidly grow this thing. So this is really one of the best copper stories on the ASX. So if people are looking where to invest in a pure copper gold play, this is a great position to be in, and really look forward to sharing the catalysts that we've got coming out in the next few months to watch that share price keep growing. So any questions, come and see me at the booth. Happy to take them, and thanks for your time.